Hey everybody, it's Jeff back with another weekly installment of the Silver and Gold Market Update. I put these out every single week to be able to track the physical premiums, the paper markets, and hedge funds. So whether you're stacking the physical or even just speculating in the paper markets, I want to provide an unbiased analysis of what's going on and really help you guys trade and buy more intelligently. So let's jump right into it. Key factors affecting the markets this week. The funds continue to buy silver, which is a reversal. They spent about 6 or 7 weeks selling their silver position, and they've reversed that. And most importantly, though, the biggest news event this week is gold did finally break above the gold paper, broke above a very key chart point, and the funds traded very odd this week, but that was a very bullish reaction. The funds are only reflected through Tuesday, and then it was really Wednesday, Thursday, Friday when it broke above this key chart point. So if I had to guess, next week they're going to add substantial longs to their position. I personally bought some paper gold just because I think that kind of move in the price action with the continued strong physical market was a really bullish sign. So, and the other reality, which I think most people probably watching this video realize, all commodities are up huge. You might have heard lumber up at records, trade my full-time jobs in the grain markets. Those are all up substantially. So really inflation's here. And finally, the US dollar is starting to break again as interest rates have leveled off. And I think just a realization that when you look at all the commodities at the record highs, and then you look at gold and silver, which should be up in an inflationary market, they aren't. I think suddenly people realize they're looking cheap compared to themselves, compared to other commodities, compared to all markets that are just up big. Gold is always going to be the favorite in terms of the big money coming in. It's easier to get size in gold versus silver. So I think gold is trading a little better than silver in terms of price action in the charts. But I think we're in a bullish period right now. Looking at the week over week on silver, as you can see, silver was up 77 cents on the week, back to 26.12. APMEX continues to sit at $10 over, and JM Bullion continues to sit at 1070 over. So there's been no break in the actual basis and the premiums over the paper market, which is good. It's a good sign. I continue to watch the sales at the big auction houses, and gold and silver still sells extremely well. So, there's no let up in demand, and supply is not coming on as heavily. So there's got to be a wake up call at one of these points that the actual physical market is tight and the paper market's not reflecting that. So as you can see, funds did add 5,000 to get up to just shy of 30,000, which is well below their peak of almost 150,000 way back in August of last year. And you can see the paper market, it's somewhat of in a choppy pattern here. Of course, if we could break back above that 28 mark, that'd be a really bullish shot. If we could break above 30, you're going to see a lot of spec money come back into silver because it's going to be making headlines and easily push that market up. So really need to see a continued grind higher, which I think we will. And then most importantly for the metals is the US dollar. As this goes down, metals will probably go up and certainly be supported. And the big thing that affects US dollar is interest rates. And interest rates have leveled off here. So the dollar is breaking again because in reality, we print a lot of money. But if rates go up, the dollar will be bid higher relative to the world currency. So as this is breaking down, that is certainly helping gold and silver. So when you break it down, in my opinion, the physical market premiums are still supportive. They're definitely not bearish because they're maintaining their levels. Hedge fund positions are now definitely bullish. They clearly have shown themselves to reverse path. When they tend to buy, they buy for usually 5-6 weeks in a row. When they tend to sell, they sell for 5-6 weeks in a row. And we're only week 2 of this. The dollar index is at least short-term bullish. And then the charts, I believe, are forming some bullish patterns here. Looking at gold week over week, this was a really weird one. I almost wonder if the CFTC report was just wrong. They showed funds actually selling 13,000 contracts, which makes no sense relative to the price action. And I followed those fund reports for really since they've been put out back in 2006 every single week. And there have definitely been occasions where they were wrong and they offset it the next week. So I'm not making much of it. And you can see that gold spot up $34, again, above a key level. And the premiums maintain, which is really surprising. You can see we've been about 6 straight weeks of just sitting at 180 over. You go to APMEX.com, there's just not that much gold available for sale. So it's not like we're getting flooded here. I think that's one of the things that's most interesting is the market was almost wondering if we trade lower, if all the people who bought it at the highs might be, as now and we call it paper hands, quick to sell. And if so, maybe that would push down the premiums. But we haven't seen it. People who buy gold and silver are just sitting on their hoard of whatever they bought, and not a lot of new supplies coming to the market, which is obviously supportive. So that's why I'm definitely bullish here. And this is the chart I was talking about. We broke above that key level. And that level is important because when you trade paper markets, a major low, when it's taken out, is usually a bearish sign. And as you can see that day in really late February, early March, we broke below that and we traded down hard all the way down to 1673. So we took $100 off just in about 7 or 8 days. And then we tried to break that 1673 and did not do it. And now the market's trading up. I mean, you couldn't paint a more bullish chart from a paper perspective. And that's what we're seeing right now. Gold finished strong this past Friday. I could see this absolutely trading up to 1850, 1900, if not higher, as long as the story remains. So physical market premiums are really, they're probably still bullish. They just haven't broken. I would almost ignore the hedge fund positions this week. We'll just have to see what they do next week. And the dollar index and the charts are clearly bullish. So I think things will go higher from here. That's all I have. Thanks for watching.